right. Um, Today is September 10th on a Thursday, 2020. Made a total of $500 on my trade, two different trades. One I made like 376. The second trade I made about 120. I'll explain to you how I traded it. Ticker symbol ITCI. I had lost $1,600 on it yesterday. It was a continual spiker that I expected to fail, but with my stubbornness and my death by 1,000 paper cuts, I failed to trade this properly. When I had shorted it yesterday, I'll review this a few of how I traded it, but I believe I was shorting it. I think somewhere here, and it just kept fading. I was up $400 like here. It squeezed backed up on me, hit my risk. I think high day or something like that. Oh no, it didn't hit my risk. I didn't take my gains, and I held on. And when it passed this point or higher day, which is where it opened at, $31.47, I covered. Shorted again. It squeezed up on me again, and I lost $1,600. I sized in pretty big because I knew I was going to be correct, but because I did not follow my rules, I took a major loss. But it wasn't really a major loss. It wasn't really me breaking my rules. I just didn't cover when I should have, and then hit my risk, lost, and then I tried again, hit my risk, and I lost, and it just kept going up on me. So today, yesterday, I shorted it. I was thinking about shorting it overnight, and I couldn't make the decision. When I watched it in pre-market, it didn't seem like it was trying to push up. So I took a short into here, and excuse me, excuse me. And watched it in the entire after hours. Watching it entire after hours, it wasn't moving, so it was great. That was a great sign. Pre-market still wasn't moving. So when market opened right here, 9:30, right down here. You'll see it, 9:30 right here. So market opened, it started to tank, and at some point right here, I was up $800, and I didn't take it because I was thinking it was gonna fail some more, and it just didn't. Then I started to see, I don't know why this candlesticks are looking like this, but when I saw that it had passed, I think morning highs or the open or something like that, I covered. So I'm like, okay, this is gonna ramp up some more. So it started ramping up after I covered. I made $376. That was my first trade on it, and it ramped up. So then I was looking to short it right here, but I don't know. I think I hesitated, or I didn't get my entry like right here when I seen that it panicked and it bounced. I was trying to get an entry of 32.50, but it went to 32.40, and I couldn't get in. And the risk on it was from $32 was just too much for me, and I didn't want to put in 400 shares. So I originally wanted 400 shares at 32.50 because then my risk would have been 25 cents per share, which is 25 cents, $25 per 100 shares, which is $100 risk, and it fell from 30 from here to like fucking, the lowest point was 29.96. So I would have made a $2.50 per share. So my risk was great. I was setting a 25-cent risk to make $2.50 per share. and I couldn't get it, and I didn't want a 32 risk, and $32 was great, but I just didn't want to risk too much money. I mean, I wasn't, of course, I wasn't trying to get the higher day, but uh, I didn't want to set a high risk, man. Because if I did it at $32, that's 75 cents per 100 shares per share. That's 75 dollars per 100 shares. So I had 400. I was trying to get in at 400 shares, and pretty much that's what 150 150 $300 per share per for my risk, and I didn't want to risk $300, and that was practically my entire overnight gains, and I missed it. I missed this whole thing right here, and it's whatever. So I was just watching it, seeing if it was gonna bounce. I had to leave around 12 o'clock from my computer to go get my hair done because I'm not going out of town tomorrow, and um, I had to leave. So as I'm leaving, I'm watching it the entire. I'm watching the stock the entire time, and when I got done or close to done, I saw that it was right here, literally like right here or something like that. So I shorted at $32 exactly. It was like 32.02 or 32.04, but I shorted, and my risk was the high of day from here, like this highest point. I wasn't gonna wait till here to 32.75. There was no point. I'm just gonna use these right here simply because it's close enough. And if it gets near here, that's for damn sure. And I've seen it many times. It's for damn sure gonna pass here. And this stock is very tricky, very choppy. But when it breaks out like a motherfucker. Choppy breakout, but it will break out a lot. And that's what happened. And I'm like, okay, I'm not gonna risk it too much. I'm just gonna risk it off of here. I was risking $65. I originally set my order for 32.15, but for some reason it got executed at 32.04, 32.4. So then it just came straight down. Sorry, I'm really tired. And it just came down. Um, I covered at like 85, 30.85. I was really trying to cover at the lowest point right here at 56, 30.56, because it hit there and it stayed there for a while, and I had a chance to cover. But when I entered my order, I entered a little bit too slowly, and I didn't get it. So I covered at 30.80 something, 84, 85, and I made 130 something bucks from $100 share order. I entered it in at $100 right here, covered right here. I saw that it was consolidating, it wasn't falling anymore. I was ready to get out. So overall, I'm down $700 on this stock. This stock really took me a run for my money, but more importantly, it took me a run for my money. I took myself a run for my money because, okay, if we go back to yesterday, when I shorted it and I was up 800 bucks, I should have covered. Then, you know, I had even I didn't cover. Then I had a second chance to cover right here. I had a second chance to cover right here for, yeah. So it was 400 here, 800 here. I had a chance to cover even more. I still didn't cover, so that's my fault. And then it squeezed up on me. I lost, and then I kept trying. There's nothing wrong to keep trying, but I had to learn that, and I learned a really valuable lesson today. Wait till you see a hard fucking crack. Like these cracks right here, right here, right here, right here, right here, right here. They're not hard enough cracks. This one was a really big crack compared to all of these. And I should have waited to for that sign, but I learned my lesson then that at that time that wait for a hard crack. So it's not like I really broke rules. It was more of just learning something new. or learning something that I already had learned. So trading it today, um, where did I wait for the hard crack? Trading it today. This was a really hard crack, but when it rebounded, I just saw this that it cracked hard, bounced up, cracked hard again, and I just took my short in right here because this is a hard crack. But I just really learned that great lesson. Wait for the hard crack. Anytime you're shorting, I believe anytime you're shorting a continual spiker, don't try to. You can anticipate the short and the crack, and if you're wrong, just quickly get out. It's exactly what Tim Grittani said in his DVD. But if you don't get out, you're gonna be fucked, and that's what happened to me. So I learned my lesson. Today I'm like, okay, I'm gonna fix it. I'm not gonna make that same mistake, and that's what I did, and I corrected it. So if you can't anticipate the crack, wait for the crack to happen, and then on a rebound, short on this rebound, and then it will fade. If you don't get a rebound, then you gotta say fuck it. But just wait till you're experienced. I need to wait till I'm experienced more to really trade this correctly and anticipate the cracks or actually short the bounces or the perk ups, whatever you want to call it. So that's it with itci. I'll be watching this tomorrow. RH did not pop up on my scanner. I don't know why, but um, I don't know what's going on with my scanner. It's not catching every stock. But I'm using uh, the stockmarketwatch.com to see what I'm missing. So I use both my scanners. But RH, I saw that it was up $18 on a day, and I was looking. I'm like, okay. Before it was, here had a really big gap up. If you look at the yearly chart, you see this big ass gap. So anytime you see a big ass gap, you know something's gonna happen. It's gonna push up a lot and probably be overextended and come back down. So this morning, as I'm watching it, I'm like, okay, I'm too focused on itci to trade any other stock. But in my head, I'm getting mental practice. I said, okay, this is either gonna pull back, bounce, or is going to do exactly as it did. It's going to go up. But this stock, it went up, came down, and pushed up. And I had to treat this stock as a continual spiker. And I didn't want to. Now I know anytime I'm trading a continual spiker, um, um, anytime I'm trading a continual spiker, I gotta understand that it's gonna take a lot of my fucking focus. That's something I learned. Like the overextended gap down, that doesn't take too much of my focus. Um, or anything near to like itci. It was a gap down, but it wasn't by a large amount. But not only that, it gapped down, went into the greens, and it spiked like a fucking continual spiker, and then gapped down again and did it again, and now its gap is going down. So I had to treat it like a continual spiking stock, and RH was the same thing. It was a continual spiking stock. So um, I was watching this stock with one eye open because I'm too focused on itci, but uh, it just pretty much uptrended. You look for the hard crack. If you can't anticipate it and you have a set nice risk, you need to wait for the bounce. And here's the bounce right here. You short around here. Sometimes you'll get it right here. Sometimes you'll get it right here. But make sure you have it right. Your risk is the high day, and it's not too much. It's what you're willing to tolerate, and then it just fades. But You're going to anticipate it here. You're going to try it right here. It's going to fade, but it doesn't work. When you see it's not breaking this level or these levels, that's when you need to cover or cover half your shares. Me, I don't like to cover half my shares. I like to cover like a good 75%, even though that's not good. And I'll add on if it breaks down this lower day. But if you shorted here, faded, and it bounced back up, you didn't cover any shares, you need to be covering at the high day. If you covered some over here, then great for you. But it goes up, you try it again, doesn't work. Here's higher day, you try shorting here. You think this is a big crack, you try to anticipate it, whatever, it doesn't work out. If the price action is not telling you it's a crack, it's a big crack, you need to get out. And not only that, it doesn't pass this higher high, so you shouldn't be shorting it here. Right here, you know, and it breaks through again, doesn't break through too much, as you see from here and here. This highest point on this candlestick and the highest point on this candlestick, it doesn't break too much. Also right here, it doesn't break too much. So you got to know that in your head that, okay, if it's not breaking too much from these points, it's not going to keep breaking up too much from any point. So when you see this crack, what gives you the what gives it off to you? What gives you what when you see this crack and it tells you what tells you that it's going to continue to crack some more and fade and really break down is when it comes down and passes this point. And this point, you see how it goes lower than the previous higher high. That's a great sign. So you short anywhere right here with the risk of high day, and then it fades. And then, you know, it passed this previous bounce point, and it's this previous bounce point, and then you just weigh it out, and you're watching it like a hawk. You're ready to cover when you see that it's not going to work out, and you see it just breaking one level, two levels. You know, the lowest point of these candlesticks, because this is where it bounced. Wherever you see it bounce at, the lowest point of the candlestick is support. So it breaks this support level, this support level, this support level. And all these support levels are arbitrary. Not arbitrary, but they're not serious, real support levels. They're just I'll call them temporary support levels. They're not the strongest points. This is a key point. The lower day is a key point of support. But you see it break this point, and then it brings that point, and it breaks this point where it bounced at. That gives you good signs. And then if it breaks past the lower day, you're in for a fucking ride, which it didn't. I wasn't watching this, so I don't know what's going on. But I'm just explaining it for the future lessons. But it didn't break this point. So if you see that it's not breaking it and it's starting to bounce, okay, if you're willing to wait for it to, if you don't cover here, and you're like, let me wait a little bit more to see what it's gonna do, and you see that it goes up and it holds right here. It holds right here for a second time. You don't see that it holds anywhere here. You see it comes down. So, and then you see it consolidating. That's going to let you know, okay, it's time to get the fuck out. I got to look to get out. So when you see that it breaks this little consolidation area at this at this candlestick at highest point, $394.48, that's where you need to know, okay, it's going to start pushing up. I'm going to cover right here. Yeah, you missed all of it from here at 388.25 to 394.48. That's about $6. Yeah, you missed a chance to make an extra $6, but it's okay. You made all this shit right here, especially if you shorted around 405. 402, you made at least $10 a share. Not much, especially if you're not entering with a lot of shares, but it's okay. You can't control how much you make. You just got to play the game. So then it starts ramping up slowly and ends up fading some more. But I don't want to sit through all of this shit, because what if it just keeps going all the way up? You're fucked. Luckily, to whoever was in this stock, hopefully they covered here or covered some here and then re-shorted over here. And then it falls. This was a great trade for whoever was shorting it and was patient enough to deal with it. But there's certain factors you got to pay attention to. It's not all, and one thing I'm learning, it's not always best to hold your entire shares, even if you have a great entry, it's not always best to hold it until you get dead bottom, because that's not always going to work. It's great. It's a great thing to do, but you take a major risk into that. I mean, you lose all your gains, all your hard work, and then you might just get stubborn and hold for the rest of the day. But this is great, you know. This stock was great. YTEN. I was actually more favoring this more after ITCI, because it was doing the same thing as ITCI did yesterday. So as I was watching it, I wanted to get in just before market open and short right here when I was watching it. Sorry, my jaw's just getting tired from talking. So it tanked or panicked, and I wanted to like, I'm like, damn, I should have covered, I should have shorted right here. I didn't. And then when I saw that it bounced, I was like, oh shit, I would have been fucked. So I'm learning and I'm trying to figure out the statistics mentally. What is it? Is it better just to short out the gate as soon as the market open, or should I wait? But when I thought about it, I'm like, this is still a green stock, and I got to treat it as a continual spiker. So I can't just short it. So I just waited, because the higher day is really where I'm supposed to be shorting at. This is my risk right here. So if I short from here with a risk over here, which is $9.76, I was just gonna call it $10. And when I was watching this, I'm like, $10 is my risk, and if I short here, that'll be almost $3 of risk. And I'm like, I'm not okay with that. It's just too much money. So that's what prevented me from shorting. But it was good that I didn't short it from here, because it would have squeezed up. I mean, where do you set your risk? Here? You could, but then you got this point right here. Don't count this long candlestick. This is most likely a error. Maybe some of these are an error too, but do you short it from here? And especially if you're seeing errors on the chart, you're not gonna have good data. But you can short it from here, but you still got to remember it's a continual spike. So you can't short from the bottom. You got to get as closest to your risk as you can. So if I use this and this point as a risk, it got close to this high, this pre-market high. Well, it's not the highest point, but this bounce, really, I'll call it a bounce. But it got close to this bounce. So you could have used this point right here as risk, and then if it goes up, or if you don't get your entry on these candlesticks, then you can try this one, that one, that one, or that one. Now, you just got to make sure you stick to your risk and you stick to your rules. Luckily, it faded, and it faded nicely. I mean, like, the bounces wasn't that big, to be honest with you. From 660 to 705. So that's a fucking 45-cent bounce. That would be great. And then 2 o'clock, you should know already to cover. I mean, you should cover fucking 11 o'clock, 12 o'clock, 2 o'clock. But at 2 o'clock, if you're still in, you need to know, okay, don't even aim to get exact bottom. But if you know that, like, 2 o'clock is coming, you're going to start seeing a little bounce. So at this point, if I see a higher high, which will be like, okay, it bounced here, it pushed up. If it passes this point, I'm out. Or if it passes this point, I'm out. And you see it bounce, you see it fade, and then you see it passing this point, I'll be so scared. I'll be like, okay, I'm gonna get out early. So I get out right here. If not, I'll get out if it had passed this point. If I see that it came down, bounced right here, it didn't pass it, but it pulled back, and then it bounced it right here, passed it right here, past this previous point right here, I'm not going to wait for it to get up to here to get out. I'm getting out right now. You're not going to get the exact bottom, and you're never going to get the exact top, but fuck you. So those are my three trades that I was watching, 3 stocks that I was watching. Um, Overall, I give myself a really good star. I give myself about a 3 to 4 stars in trading today. The only problem was I didn't cover when I was supposed to. Sorry about that. I didn't cover when I was supposed to because on itci because I was just trading the stock like it was telling me to. Like I was just following the price action and letting the stock tell me when to get out. And when it came down here, I'm like, okay, I'm just gonna wait. But you know, it didn't give me those signs, so I got out. So I think I did a good star, 5 star, 4 or 5 stars, really 4 stars because I listened to my risk. I listened to my rules. I don't think I broke any rules. I didn't. I had a good. I had a good entry, a good risk. Here, I was only risking like $65, so I did good overall, and I made 500. Let me see right here, $502 on ITCI, and that's the only stock I traded. But soon I got plans to be out of the excuse me, the PDT rule. My time is coming. I just need to be patient. Thank you very much. Glad I made this video.